Hey everyone, welcome back to the deep dive. With all this talk of a recession and President Trump's tariffs still floating around, I'm sure a lot of you are wondering where to put your money right now.
Yeah, for sure. I mean, the economic outlook is making a lot of folks a bit jittery, and rightfully so. You got to be strategic.
Absolutely. So we thought it would be a good time to, well, deep dive into a recent article from the Motley Fool that caught our eye. It was published just yesterday, Friday, April 4th, 2025, and it really digs into a comparison that I think a lot of investors are grappling with right now. Amazon versus Home Depot.
Yeah, that's a great one to unpack. I mean, both of these are giants in their respective spaces, consumer-facing household names. But the question is, in this kind of uncertain environment, which one emerges as the stronger buy? Right, right. And that's what this Motley Fool piece really tries to dissect. So I guess the best place to start would be with Amazon, right? The article kicks off by focusing on their North American e-commerce business, which is still their bread and butter. They pulled in a whopping $115.6 billion in sales just in the last quarter.
Wow, that's a huge number, but I can already hear some folks thinking, hold on, if the economy takes a hit, won't people cut back on online shopping? It seems like a natural reaction, right?
Yeah, I mean, that was my first thought, too. If people are worried about their jobs or their savings, they're probably going to be more cautious about clicking that buy now button.
Exactly. But here's where things get interesting. The article actually digs into Amazon's performance during past economic downturns, and, well, the results are kind of surprising.
Oh, really? Like what? They actually did well during those times.
Yeah, they did. Like, take the first year of the COVID pandemic, for instance. You'd think that would have been a disaster for them, right? But nope, their revenue actually jumped by 22%.
Wow, that's counterintuitive. I mean, everyone was stuck at home. You'd think they would have been ordering everything online.
You would. But then you think about all the supply chain disruptions and the uncertainty around jobs and the economy in general. It's really remarkable that they not only survived, but thrived. And it's not just the pandemic either. Back during the 2008 financial crisis, their sales rose by a staggering 29%.
Okay, so they've got a track record of weathering these storms. But, I mean, past performance isn't always a guarantee of future results, right?
Right, of course. We can't just assume they'll automatically sail through any recession. But it does suggest, at least to me, that there's something about their model, something about how they operate that gives them this resilience.
Yeah, that's a good point. And the article kind of hints at that, doesn't it? It talks about how Amazon isn't just a one-trick pony. It's not all about e-commerce.
Right, and that's crucial. They've got that diversification, and that's what really helps them navigate these choppy waters.
You're talking about Amazon Web Services, or AWS, right? The whole cloud computing thing.
Bingo. AWS is a beast in its own right. It's not just some side hustle for Amazon. It's a dominant player in a market that's absolutely exploding.
Yeah, and they're not just participating, they're leading the pack. I mean, the article mentions they hold a 30% market share in cloud computing. That puts them ahead of giants like Microsoft and Alphabet, right?
Yep, they're out in front, and that's a big deal, especially when you consider where this whole cloud thing is headed. The article cites a projection from Goldman Sachs, and get this, they estimate that global cloud sales could hit $2 trillion, trillion with a T, by 2030.
$2 trillion. I mean, that's just, wow, what's driving that kind of insane growth?
Well, a big part of it, and this is where it gets really interesting, is artificial intelligence, or AI. It's basically the fuel for the next stage of the digital revolution. And it's going to need massive amounts of computing power, and guess who's got that?
Amazon with their AWS infrastructure, it's all starting to click now. So they're not just riding the cloud wave, they're also strategically positioning themselves in the AI arena itself.
Exactly. They've got their own suite of AI services, and they've even made a $14 billion investment in Anthropic, which is a leading AI company. That's a serious commitment to the future of this technology.
Okay, so let me try to sum this up, just make sure I'm following. Even if their e-commerce sector faces some bumps in the road, maybe due to, folks tightening their belts, they've got this huge growth engine in AWS, and they're doubling down on AI, which is only going to get bigger, right?
You got it. That's essentially the bullish case for Amazon that the article lays out. They might see some stock price volatility in the short term, which is to be expected given the market jitters, but their core businesses look pretty darn solid for long-term growth.
Makes sense. Okay, so now let's switch gears and talk about Home Depot. How do they stack up against Amazon in this whole economic uncertainty thing?
Well, the article starts by pointing out that Home Depot just released their fourth quarter results, and at first glance, things look pretty good. They actually beat expectations on both sales, bringing in $39.7 billion versus a projected $39.1 billion. and on earnings per share, reporting $3.02 compared to the anticipated $3.01.
So a solid quarter. That's got to be a good sign,
Oh,
right?
yeah, on the surface it is. But the article then dives into some of the near-term concerns that are weighing on Home Depot's outlook. It's not all sunshine and roses.
Interesting. So what are they worried about?
Well, for starters, Home Depot themselves are projecting only a 2.8% sales growth for 2025, which is pretty modest compared to their past performance. And get this, they're actually forecasting a 2% decline in adjusted earnings per share compared to last year.
Oh, wow. That's a pretty big shift in expectations. What's behind that?
The article points to a few things. You've got those high mortgage interest rates we talked about earlier, which are making it tougher for people to buy homes. And then there's the fact that houses are still really expensive, so fewer people are buying homes, which means fewer people are doing those big renovations and upgrades that Home Depot relies on.
Yeah, that makes sense. If you're not buying a new house, you're probably not going to be running out to Home Depot for new appliances or flooring or whatever.
Exactly. And then, of course, there's the looming threat of tariffs. If President Trump follows through with his harshest tariffs, it could really put a damper on home improvement spending.
Yeah, I can see that. Tariffs on building materials and appliances would definitely drive up prices, and that would make people think twice about those big home improvement projects.
Right, and it's not just the tariffs themselves, it's also the uncertainty they create. People might hold off on spending, waiting to see how things shake out, and that hesitancy can really hurt a company like Home Depot.
So basically, they're kind of stuck between a rock and a hard place, right? They've got these external factors like the housing market and potential tariffs that are putting pressure on their core business.
Precisely. And it's not just the economic stuff either. The article mentions that consumer sentiment is taking a hit too. People are feeling less optimistic about the economy than they were last year, and there's renewed worry about inflation creeping back up.
Yeah, I've been hearing that too. Inflation is a real concern for people. It eats away at their purchasing power, and it makes them think twice about spending money on anything that's not absolutely essential.
And that kind of cautiousness doesn't bode well for Home Depot. So while the article acknowledges that they might still be a decent long-term investment, the near-term outlook seems pretty cloudy, to say the least.
Okay, so we've got Amazon with its strong cloud computing and AI play, and Home Depot facing these headwinds from the housing market, tariffs, and just general economic uncertainty. So where does the article land on the whole Amazon versus Home Depot question? Which one do they recommend?
Well, they come right out and say that, based on their analysis, Amazon is the better buy right now.
That's pretty clear-cut, and I guess their reasoning goes back to what we talked about earlier, right? Amazon's diversification with AWS and their bet on AI gives them a leg up in this kind of environment.
Exactly. They're less vulnerable to the ups and downs of any one particular sector, and they're positioned to capitalize on some of the biggest trends shaping the future of the global economy.
And Home Depot, even though they had a good quarter, is facing those more immediate challenges that could impact their earnings in the coming year. It's not that they're a bad company, it's just that the current landscape favors Amazon's strengths.
That's a good way to put it. But of course, the article does add a very important caveat.
Oh yeah, the market is still a wild beast, isn't it?
It is. They emphasize that both Amazon and Home Depot are likely to experience some stock price fluctuations as investors continue to assess the overall economy. Yeah, things could change quickly.
So even though they favor Amazon, there are no guarantees. It's a good reminder that investing always involves risk.
Always.
Well, this has been a fascinating deep dive. Thanks for breaking it all down and for helping us understand the nuances of this comparison.
My pleasure. It's always a good idea to really look under the hood, especially when the economic winds are shifting like this.
For sure. So to recap, what we've learned from this Motley Fool article is that while Home Depot has shown some recent strength, they're facing some pretty serious headwinds in the near future, mainly due to potential tariffs, concerns about inflation, and a less than optimistic outlook for consumer spending. On the other hand, Amazon, with its powerhouse cloud computing business, its dominance in e-commerce, and its strategic moves in the artificial intelligence space, seems better positioned to navigate the current economic uncertainty and capture those juicy long-term growth opportunities.
Well said.
And that brings us to our final thought for our listeners. As artificial intelligence keeps advancing and consumer spending habits continue to evolve, how do you think these bigger trends might further impact the long-term trajectory of both Amazon and Home Depot? It's a question worth pondering as you make your own investment decisions. Thanks for joining us on the deep dive, and we'll see you next time.